Hey folks, Sam Frio here, the rate update. Today I want to talk about, is it a good time to buy now or not? So what I want to discuss in this video is first, what the Federal Reserve's doing. What are they going to do about rates and tapering and all that stuff? And I'll define that here in a minute. What are mortgage rates doing? And then also the state of the housing market. Is it's going to continue to go up, 10, 15, 20% a year, or is it going to start stagnating? So that's what we're going to go over next. So don't go away. We'll be right back. So the biggest question that I get all the time is, Dan, is it a good time to buy? So watch this video real quick, and then when we come back, again, we're going to dissect the Fed, what's going on with rates, and what's the state of the housing market. So after this video, we'll be right back.
The housing market's been on a tear since the pandemic, with people relocating and looking for bigger properties, and prices have soared as a result. Zillow just today saying prices are up nearly 18% year on year, in line with other recent data points. And my next guest says home prices can keep rising. Joining me now is Matthew Poynton. He's senior property economist at Capital Economics. Matthew, it's great to have you. Explain the fundamental basis for this.
Well, there's a number of reasons why I think house prices can maintain their current level. I think house price growth is definitely going to slow, but I'm also ruling out a house price crash. Firstly, as rates start to rise, most borrowers are protected. They've got long-term fixed rates. We had a refinancing boom over the last few months, and that means most people have locked in these record low mortgage rates. Secondly, mortgage lenders haven't responded to house price booms by loosening their credit standards like they did in the mid-2000s. In fact, they've done the opposite. They've tightened up. We've got credit scores going up. We've got DTIs, debt-to-income ratios, coming down. And that really means that the current mortgage book is pretty safe. So borrowers are well protected from any increase in rates. Another point is home equity has surged. House prices, as you say, up 18% year on year, record gains. So most borrowers have a lot of home equity, and that means they've got a lot of skin in the game. They're going to want to keep up their mortgage payments if they can. So that's another reason why we think that's going to rule out any sort of forbearance surge. We don't see that on the horizon. And without the forced sellers and this forbearance, foreclosures coming through, that really rules out a large fall in house prices.
So I think for a lot of people, they would look at these headline numbers and go 18% price gains to just 3% price gain. That's a huge slowdown. It's like, well, it means prices are still rising. It's a little bit like the transitory inflation discussion, which is to say that even if inflation slows to 2%, it's coming after a couple of chunky years. My point being, why don't you think home prices could outright decline?
Because I don't think for an outright decline in prices, you normally need to see forced sellers. You need to see a lot of foreclosures flooding the market with homes. We don't see that on the horizon. And even if we did get some increase in foreclosures as the ban expires, the market's incredibly tight right now. There's not much supply in the market. Demand is still high. And so any foreclosure is going to be snapped up. There's lots of demand out there to take up these houses if there's more in the market. So they don't really see the big increase in forced sellers that really causes house prices to decline.
Right. And to put it differently, if we start to see that for whatever reason, that would be a much more worrisome sign of a fundamental change from the market dynamics that we see now, even with affordability, declining with this increase in prices. Matthew, we'll leave it there. Thanks for joining me today. It's good to have you.
Thanks.
Matthew Poynton with Capital Economics.
So that was really good content, but so let's now dig into these numbers. So let me go one by one. And what I really want to do is I want to put in priorities of what the Fed's doing, because they're the ones, I'm not saying manipulating mortgage rates, they're helping the bond market. And part of that bond market is mortgage-backed securities. So we're going to talk about that here in a second. And then what are rates doing right now? Where should they be? What's going to happen when the Fed tapers? When do we think the Fed's going to taper? And then is the housing market going to crash? Don't think so. And I'm going to show you all this data next. So let's start with the headlines that we just went over. And it is this: Federal Reserve decisions, housing data, what you need to know this week. Well, the Federal Reserve is meeting this week, and what they do is they talk about their policies and what their stance are and what the economic data is going and everything else. So let me conclude, or let me show you real quick, or go over my thoughts on what's going to happen when the Federal Reserve Chairman Powell comes out Wednesday and tells us what they plan on doing. They're going to say, well, housing or The number one thing they're looking at is employment, not housing. Employment. Where that numbers come in last report, terrible. They're about a third of where we thought we were going to be. So the employment numbers stink. Are they going to get better? Yes, because of the excess stimulus that's out there, part of the CARES Act and everything else. It's all lapsing now, and people are going to be basically forced back to work. So we're going to start seeing the employment numbers starting to go a little bit better. Okay, so that's what we're looking for in the next couple weeks in employment numbers. All right, so based off of that, the Federal Reserve right now is going to be put on pause. They're going to say, well, that and those numbers, they're not looking good. The next thing is they're going to look at is they're going to say inflation. Is inflation really out of control? They think it's transitory, meaning it's spiked and it's going to come back and down in line. I agree with them on that state as well. The next thing is the Delta variant or the Delta virus. Is it playing havoc in the market? I still think it's a little bit too soon to tell. A lot of those that are afraid of all of this is they're stirring up that pot there, and a lot that don't think it's a big deal are stirring up this pot in the middle, on this side in the middle. Where is it? I'm not seeing a huge Delta variant, exposure in a lot of pieces of the economy that I monitor. So I don't think the Delta variant is going to be a big role in this, but it could change. It's a daily event. It's like the coronavirus. It went from, just spiked and then it came back down and so forth. So the Delta variant is also another curveball in all of this that's going on. So those are the things that we're watching from the Federal Reserve. So they're going to come out, they're meeting today and tomorrow. They're going to come out on Wednesday and saying, here's what we're planning on doing. Again, I don't think that anything's going to be really decided at that point because, again, the employment numbers aren't there. The inflation is starting to come back, and we had reports last week of showing that. The Delta variant is also. Another thing that's going on is I'll try to give you guys a report maybe tomorrow on this Chinese real estate firm that's collapsing. And you might not understand what's going on. You might woke up this morning, looked at the stock market and said, what happened? Well, there's a huge real estate investment firm in China that's on the brink of collapsing, and that could be catastrophic, possibly. Is it going to be 2008 relived? No, it's not that big, but it should be, or it can be kind of big there. Okay, so the next thing we want to talk about is rates. So where are rates going? Guys, they're going to stay steady. They might come back. They're going to stay in a tight. Let me rephrase it this way. I don't think they're going to go much lower. The propensity of them to go up from here is much greater than them to go any lower. But do I think they're going to spike? No. They're going to stay in a range, maybe right now between 3 and 3.25 that they might be changing in. I don't think we're going to see 3.5 by the end of the year. Maybe in December if the Fed comes in and really starts pushing the tapering piece of the equation. But I don't think rates are going to really skyrocket. And the data behind all this is basically saying I don't really think it's going to affect the housing market because people are flush with money. People are looking to buy homes and they want to, either move out of the city into the suburbs or something. So it's like, they want to do something. On the other flip side of that is if you're renting, well, your rents are going up skyrocketing too. So, it's a catch-22. Do you buy a house even at the inflated prices, knowing that you're probably getting in, at a high end, but are they going to plummet? Housing prices going to plummet? No, they're probably going to stagnate. But at least you have that payment for the next 2, 3, 4, 5 years. It's not really going to move. Where on the rent side of the equation, it's probably going to go up at least 5, 6, 7, 8% a year. So where's that going to put you a year from now? And then finally, on the housing market, are we seeing possibly a glut of houses coming on the market? I think Yahoo's finally starting to get it. They might be listening to me. I was quoted in Yahoo Finance about a year ago in some of the videos that I did. It was kind of cool. And they quoted me on several of the videos that I did. But here they're finally starting to get into the why we might have more houses coming on the market. And what do you see here? Well, the forbearance thing I've been talking about right here. Forbearance expiring. 850,000 people coming out of forbearance August and October. Just like I said, they're thinking a decent piece of this puzzle is going to be added into the market as new homes on the market. Who called that one? I did. I still can't figure out how nobody's catching on to this. Okay, so if you follow my channel, we hit a lot of these things. What the Fed was proposing, what their mandates are, what we're expecting there. And I also said, they're probably going to start tapering or at least announcing in December. That was validated today. The forbearance numbers that I'm talking about, adding more and more homes to the market, that was validated on Yahoo today. Mortgage rates, that was just validated on CNBC. So far I'm 3 for 3 today, which is a good day. That's why I'm posting early. And then let's go on to what's effect this has on the MBS market. So guys, on last week I said, I'm not fearing because I think we're going to have a little rally back in the market. Where are we? Okay, we nailed this one too. So let's get to the data, the MBSs, where we were through the quarter and where I thought we would be by midweek this week. Okay, so why are we watching this? First of all, I want to let you guys know, what is the MBS market? Why did I bring this up? Well, this is the MBS market, mortgage-backed securities. It's the bond that trades on Wall Street that's the biggest component of your mortgage rate. This basically sets the tone for what your mortgage rate's going to be. As this number, which is the price, as the number goes down, okay, what happens to rates? I'm trying to trick you guys today. If the number goes down, rates go up. Okay, there's an inverse relationship. When this number goes down, rates go up. When this number goes up, like we see it today, rates came down. So if you would check my video from Thursday and Friday last week, I said, you know what, we're seeing a sell-off, but it's an overreach sell-off. Look down here. If you had a mortgage company that you applied right here, they locked you in. Okay, we had a nice rally. Again, as this goes up, mortgage rates come down. This is a pretty big move, guys. So if you locked in, you're losing out. You're losing out on where rates are today. I'm expecting the rates to stabilize right in this area here with the high side of 101.4 right here. And I don't want you guys, you don't really need to pay attention to what this number is, just what direction we're going in. Okay, so last week, right in this range here, we were trading at a 101.38 with my expectations of being a 101.4. So I was 2 basis points off. And then we just plummeted. We're teetering back to that range. So I see our next range, as long as we get past this threshold right here, this line. Okay, this is the 100-day moving average for the MBS market. If we can cross that line, the next threshold is a 101.28 all the way up to 101.4. Okay, so I expect us to be trading right around this area here, meaning I still see a more of a rally into this market, bringing rates down a little bit more. Economic calendar for the week. Housing market index, we're not going to really pay attention to that, but tomorrow we're going to start in the housing starts and permits. Are the home builders, what are they doing right now? Are a lot of people saying, okay, it's time to buy now that lumber prices and all kind of other prices that go into your home start coming back in line? Also, we're having a lot of people on the fence because of the CARES Act now being forced back to the labor force. So you're going to have more labor, lower prices in materials, and now we just got to get this logistics thing, meaning the transportation of goods and services places. We're going to have to start seeing an improvement there, which I can see that in the short-term horizon, that coming back into play. So I expect these numbers to be a little bit better than where we were in the last 2 months, and with a trajectory of going up on a steady basis for the next 3 to 4 months. Then Wednesday is the huge news. Federal Reserve's their interest rate decision. So I will be posting a special alert on Wednesday around noon, as soon as the Fed comes out with their information, and then Federal Chairman Powell will be speaking at 1:30. That will move the markets one way or another. And then here comes the weekly initial jobless claims and the continuing claims. I'm expecting these numbers to start to drop again, as well as the data of people getting back to work is now filtering into all these surveys. So that's that. What effect have we seen today in the intraday? So where did the MBS market go today? We had a huge rally into the opening. we dropped, and then we've had nothing but buyers almost throughout the day from 9 o'clock till now. That's a great sign. Okay, that's why I'm saying I'm expecting this to continue to rally. So that is my report for the morning. If you like my video, find value in this, please give me a thumbs up. Don't forget to subscribe down below. I need you guys to subscribe. We need to get to 20,000 subscribers by the end of the year, and only you guys can help me there. To find out more about me and my team, if you're in a forbearance, please call us. We can give you all your exit strategies, what you might be able to do. Don't be surprised when we come back to you and say, keep your mortgage that you have now. Just try to catch up with, based on how much you need to do to get caught up, then keep it. Or we might suggest, a refinance or a streamline refinance or something to help you guys out. If you're looking to buy a house or refinance, please check out our website, give us a call, give us what your thoughts are. What are you looking to do? We also have a new pop-up feature on our website. When you go in there, wait about 5, 6, 7 seconds. It's going to pop up saying, what is your preferred rate? What rate are you looking for? If it's not available today, call us, email us. We'll quote you a rate. But if it's not available today, we can put you into that database. So the second that rate comes available to you, you get noticed, we get notified, and we can get the ball movement on your end. So again, if you find value in my channel, please give me a thumbs up, subscribe. If you want to find out more about me and my team, go to the rate update. I'm going to plug it in. Let's see if the pop up, therateupdate.com. I already logged in a little bit ago, so it probably won't pop up. Here's all our information. There's a ton of data up here that you can check out, videos, educational things such as, blogs, everything else. There is that new post that we got. So if you're like, hey, let me know when my rate hits this. Well, you click there, you fill out your information, we'll get notified, and we'll make sure you get notified as well. So if you want to find out more or talk to us, just give us a call at 844-775-LOAN. You can also schedule a meeting with me or one of my loan officers. Just click here. It'll take you to our calendar. You can pick the day and time of your choice. And then at that day, at that time, we'll be reaching out to you. Or if you want to apply right online, it's pretty simple to do that as well. Just click the Apply Now button. Click it. It'll open up the website. These are all my loan officers. You can pick anyone you want to deal with. Don't pay attention to the states we're licensed in, but we are licensed basically all throughout the country. So if one of my agents, one of my loan officers can't help you directly, just go ahead and apply anyways. It'll then get floated over to me. I have the ability to do loans all throughout the country, and I'd love to be able to help you with that. So that's it for today, guys. Thank you so much for watching. I'll be posting later this afternoon with what rates did and how we ended the day. So God bless, guys. I hope to hear from you soon. Bye-bye.